gentleman from North Carolina for yielding back, and now the gentleman from the inspiration for the Fintech flyover in Lincoln, Nebraska, Mr. Flood, for 5 minutes.
Thank you to the good chairman from the state of Arkansas. Mr. Sands, according to a study conducted in 2021, banks that partner with fintechs average 2.5 partnerships per institution. In your view, why are banks partnering with fintechs?
Thank you for the question, Congressman. I would say that what banks like Web Bank have realized is that when you combine very knowledgeable, effective fintech companies with a bank, you unlock the best of each of those participants. Fintech companies are incredibly customer-focused. They build amazing tech platforms at scale with reach, excellent customer experience, minimal friction, what have you. Banks are very good at underwriting, at credit, at regulatory oversight. They're not necessarily the best at building really great tech platforms. And so when you combine those capabilities, 1 + 1 = 3, if not a larger number. And so I think that's why you've seen over the last handful of years banks coming around to the conclusion that if you can't beat them, join them, and they're better off partnering in order to leverage the capabilities of fintech companies.
So I'm really interested in financial technology, and as the chairman said, Lincoln, Nebraska is a fintech hub for the United States. We'd like to have more. In the case of the state of Nebraska, I think that technology can also be useful in ensuring that smaller community banks, we have about 140 community banks in Nebraska, more state charter banks than anybody would ever imagine. They get access to some of the same tools that larger banks have, like a slick mobile app, an updated consumer interface on their website. These are the types of features that customers, especially younger customers, have grown to expect. The problem is for some of the smaller banks in our communities, they don't necessarily have the bandwidth or the resources to provide these features that consumers are increasingly expecting themselves. That's where, to your point, I think these important partnerships come in. So this is a question for both Dr. Lenz and Mr. Sands. Could you both speak to the potential benefits that fintech partnerships can provide to community banks and their customers?
I'll start with a quick answer. I would tell you that the benefits of a fintech relationship are available to all banks, including community banks. But I would say that in the current environment, banks will need to invest substantial resources to take advantage of any of those benefits. The benefits could be myriad, depending on what they're looking for, from a slick front end or better data analytics to better underwriting, whatever it may be. But in order to unleash the benefits of any fintech relationship, especially given the current third-party risk management guidance, they will have to devote some pretty substantial resources to be able to structure the relationship with that partner and oversee it effectively. And unfortunately, I think that guidance makes it difficult for community banks to live up to that standard.
Thank you for the question. And I would second that. I think that community banks serve, I come from North Carolina. I grew up in the Southeast. Community banks are what serve a lot of small towns. And the big banks don't show up, right, for those kinds of things. The opportunity that fintech allows community banks is phenomenal, but in a highly regulated environment, it becomes difficult for them to adopt those kinds of things. The only way I think that community banks can stay viable is to offer those kinds of products because it's too easy for consumers to get a hold of things. I think community banks offer a lot to the rural communities in particular. I think they have a place in the United States. And so these kinds of partnerships are instrumental. The idea that a community bank can develop fintech products is, it's not possible. They're too small, they don't have the resources, and let's face it, even the large financial institutions have trouble. That's why they partner.
So along those lines, let's talk about the recent guidance issued by the Federal Reserve, the FDIC, the OCC regarding risk management for some of these fintech partnerships. Do you think that has a chilling effect on, would it have a chilling effect on some of these community banks being able to offer their customers what a large bank can do?
I think it'll have a chilling effect on all banks, not just the small banks, across the board. I mean, if you look at where innovation's coming from, you know, for the most part, it's not coming from banks. Square did not come from a bank, right? But it's afforded millions of small businesses the opportunity that they would only have if they were large. If you look at innovation kind of across the board, there's a reason that it's not coming from banks. So yes, I agree with that 100%.
Thank you, Dr. Lenz. I yield back.